Hi there, welcome to Grain TV. It's Friday, August 12th, and it was a crop report today, but you wouldn't know it by looking at the closing numbers. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, corn closing 2 cents higher, beans off 1 cent, and wheat in Chicago up 5 3/4. What's unusual about these changes is they hardly reflect the bearish sentiment that was transparent in the USDA crop report. Let's take a look at what USDA threw at the grain trade today. First, let's start with corn numbers. Corn production was up sharply from July's estimate and well above trade expectations going into this report. First, with yield. Corn yield was pegged at 175.1. That's well above the 170.6 that had been floating around as the average analyst estimates. In addition, production came in at a whopping 15.1 billion bushels. That's billion with a B, and well above 14.76 billion. On beans, not much better over here, also giving us a higher than expected number, 48.9 on yield versus expectations of 47.5, and production topping out just above 4 billion bushels, above the 3.9 billion bushel mark. When we look at carryout, here's where USDA had to get creative, especially in corn with such a large crop expected. They had to bump demand numbers by a sizable 300 million bushels from their previous forecast. They did that with increased feed use of 175, increased export demand of 125 million bushels to bump up demand numbers by 300 million bushels. Even with that, though, these supply and demand numbers shed or leave with a large 2.4 billion bushel carryout, well above the 2.25 that had been expected. On soybeans, they did bump up crush and they did bump up exports by about 30 million bushels combined. That kept soybean carryout at 330, and wheat coming in virtually unchanged, with very little changes in the overall supply and demand situation. But even with these bearish numbers, the market really sort of changed gears after these numbers came out. There was an initial pulse down. First, let's look at these corn on a 30-minute chart here. And you can see quite clearly where the report comes out, that big bar down going all the way down to 323 on D's corn. But after that, we didn't get much follow through. We didn't get the selling that maybe some of us in the trade would have expected in light of these numbers. I think overall, what I would take away from today after the corrective move higher is that the people or the traders are mostly unsure of USDA's large yield numbers at 175 for corn. Actually 175.1, well above average analyst estimates. I think most traders are saying that number is too high and that the heat and prolonged stress that's going to lead to bad kernel development will ultimately cause yields to be lower than that. So I think pretty much everyone shrugged this off, and instead we actually found the market moving higher. Now, does that mean we move sharply higher from here? I don't know. I'm a little reluctant to say we go sharply higher from here. I know some people were really confused after this number, thinking that we would get a big pulse down and seeing the market correct. I know some people are second guessing some of their decisions, but I would stick with the plan that prices probably need to come down in spite of potential yield losses down the road, because those yield losses won't be known for several months now. Certainly the next formal number will come in September's report. That's another month away. And then into harvest, we won't have or at least until harvest, we won't have a really true handle on that. So, we have punished this market down, but these numbers are exceptionally large, and I wouldn't be surprised to see us sort of trade down over time without any sort of big changes in the supply-demand balance sheet. On beans, not much of a recovery. We did in the day, down a little bit, but you can see we traded really widely around the crop report announcement. But continuing to see strong demand on the export numbers may help soybeans weather the storm a little better than corn. Corn has the problem of a very, very large carryout. We know a lot of producers are not only looking to next year's crop as being big, but they're still worrying about what to do with old crop. A lot of people are still sitting on old crop carryout. And so, we wouldn't be surprised to see this market get drugged down into harvest. That's all we've got for today on Grain TV. As always, if you want to learn more how we can help you in your own marketing situation, visit us online at grainhedge.com. As a Grain Edge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.